Hello value investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Every Friday I come up with my investment strategy and I talk about some of the things that I think about when investing, and I hope that by discussing it might rub off on you, or you might think about what you like about my investment strategy. You might think, okay, I want to take that from how Michael invests, and this works, this doesn't. And also, by explaining it to you and talking you through it, I also have to kind of synthesize my own ideas and, try and revisit the ideas and what works, what doesn't. Looking for disproving ideas and really trying to think through and optimize my investment strategy. So anyway, hope you liked it. So we're going to get into price anchoring, how to think about price anchoring. We're going to talk about the fact that investors simply cannot forecast. And then we're going to talk about building a system for investing and what that entails. And then some helpful hints about removing a narrative from the company. So let's just get right into it because we're quite time pressed here. So price anchoring works really well in a choppy market. In 2021, we've had a really choppy market. I invest predominantly in small cap stocks, so these have just been absolutely battered. And ultimately, this has worked really well. If you look back to how February, the stocks were really in favor with a lot of investors, and then how things have fallen back down. And it's very easy to look back and say, okay, the stock was trading at, let's say, $30, and now it's back to 27. So now it's a good investment. And it goes back to 30. And then you cash in. Yeah, you made your 10%. Great. But ultimately, this is not really a way to invest because the market is really choppy, and that works really well in short periods. Now, if you look back to, let's say, just a couple of years ago, let's look back to 2018, and you look back how share prices have moved in 3 years, it's just mind-blowing, okay? So you can't build a strategy, you can't build a whole career of investing in just looking at very short time horizons. So when you look at a company, try to think as the owner of the business, try to think, okay, if I had to only trade in and out of this, like that Buffett quote where he says, I would do very well if the market was only open for a day a year. So think like that. Think that you're a business owner, you own this business, and you can only have the option to either buy more or sell once a year. That's the way, and this, you're locked in, and you're having to really think through the business. Do you like the business? And you're not trying to see how it did over the last 3-4 months, the share price. Is it trending, or is it in range bound, or any of that nonsense? You're just trying to think, does the valuation ultimately make sense? I mean, valuation is important, but you're really trying to think a lot about the business as well. So price anchoring is just, there's a Daniel Kahneman book, that Thinking Fast and Slow, and in it talks about, if I say to you, okay, what's the last 2 digits of your telephone number, and you think it through, and you then say, okay, how many African countries are in the UN? Depending on the last 2 digits of your telephone number, you're going to anchor your answer to that. And that's I'm just priming you in that one question that's just absolutely nonsensical into how many, if you thought it logically, how many African countries are in the UN. So it's this kind of idea that the mind is just so fallible, it's just so, we're so prone as humans. All we were designed to do is survive. A tiger coming your way, run. That's pretty much what we do. And investing is quite a new thing if you think about it. Investing is only now, 50, 60 years on in most of the developing world. So we're not really set up as human beings to do this successfully. So don't price anchor. Try as much as possible to think about the underlying business and its prospects. Next, investors can't forecast. Any time you want to think of, when you listen to any investor say, I think that the business is going to do X amount over the next 3 years, it's nonsense, because nobody could have predicted COVID, right? So you look at the airlines, when COVID came around, everyone was panicked, everyone sold on that, right? It was just like mass selling, even Buffett. And look at where the airlines are now. They're back to where it was, like nothing happened. So nobody can forecast. And that's fine. You don't even need, when you invest, to be right 50% of the time. You can be less than 50% of the time accurate, as long as you don't lose a lot of capital when you're wrong. And obviously, you ride the winner a little bit, that you can make up for the losses that you've made. But it's just fascinating. Not many professions that you can be wrong 50% of the time and still be incredibly profitable at the end. So that's just something that I talk about when investors think about, okay, there's a quote from Bill Gates, I think it was approximately 2003, might have been 2005, where he said, Google, at the time it was Google, Google is coming out with a gigabyte of data on their emails, that anyone can have up to a gig of data. And that was, Bill Gates at the forefront of the technology curve. And look at, in 2021, I have about seven gigs of data. So, nobody can see, everyone's trying to kind of think in a linear fashion, and in markets, things just compound. So compounding is mind-blowing, that geometric rate. It's difficult for us as human beings. Even when we try to think about it, it's very, very difficult. So forecasting, don't try and forecast. Try and build a system for investing. So the way I try and think about it, I try and think about buying a company as cheaply as possible, and I'm trying to think about where the business can be in 3 years' time, and then I walk back from that period. For example, I know the market is always looking forward a year, so I don't need to hold up business necessarily for 3 years. I need to probably hold it for 2 years, but if I can buy it today, and I can buy it when the outlooks are not very good, people don't really like the stock, people don't really understand the stock, something's wrong with the business, and I'm saying, okay, I'm willing to buy it now. I know that it can go down or up in the interim, but I just hold on to it with patience and perseverance and grit for approximately, a year and a half, coming on to 2 years. I can be nicely rewarded when I sell it in 2 years' time. If you can buy a business and you can sell it in 2 years' time for 50% gain, that's approximately 22% compounded. So that works out really, really nicely. Another helpful hint here that I want to talk about is remove the name of the company. Remove from you when you buy the investment. Try to remove as much of the narrative possible. Look squarely at the numbers. Do the numbers make sense? Are they trending in the right direction? Is the company growing and expanding over time its margins? Is the company making more free cash flow over time? They might not be the world's best allocators. Not everyone is a Warren Buffett, but does it make sense? You want to try as much as possible to position yourself where management is aligned with you. Hopefully, in most instances, you're trying to find businesses, the founder's still involved, businesses where, if it's not the founder, that management is really, really aligned. But for every one of those, rules, there's like another rule that it hasn't worked. For example, Tim Cook from Apple, he's arguably made he says his tenure as a CEO, he's probably made more earnings than any other company in the world. No company has made as much profit as he has, and he hasn't got that much skin in the game. So for every one reason that you can see, there's always the other reason, but try to find businesses where management is aligned, management is really trying and motivated and incentivized to deliver you, the shareholder, with more free cash flow over time. So hope you found this video useful. Don't forget to check out my marketplace to find out which stocks I'm particularly interested in right now. We're in the middle of the earnings season. It's a very exciting period to be investing in small cap stocks. So come and check out my marketplace. You're welcome to do a totally free trial, and there's no reason why you shouldn't do a free trial and see, if it suits you. There's absolutely no reason you shouldn't come in, check it out. If you don't like it, unsubscribe anytime before 14 days, and you're not going to get charged anything. So come in, check out our investment community. We're growing and it's really exciting. And yeah, so I hope to see you soon. Bye bye.